Okay. So now it's working. Finally.
Awesome,
Finally,
awesome.
we have Tony
Hey,
Battista.
hey, better late than never. I have no restraints. I'll stay on as long as you need me. I got a show to do at 2:30. I feel like I owe everybody there.
Don't worry, it's a
Whatever
pleasure.
you want, man.
It honestly an honor to have the best friend of Tony Batista of Tom Sofnoff over here. Did he
I
tell
got
you
you.
the
Thank you,
story
man.
of Mexico? Did he already told you what was the story with us and what was the thing that we are doing? And do you already are you already aware of what we are doing with Tasty and all the stuff?
Yeah, I mean, I know we're helping you guys out and everything like that. We think it's awesome, and it's a win-win for everyone.
It is a win-win for everyone. There has been some beautiful comments from you and from people at Tasty, in which Tom. Well, I have to tell you that Tom was with real PhD people explaining Tasty works and Tasty trade. How can they apply science? Um, how can PhD through the work can apply science in efficient markets? And he has made this conference with us at the university in which we participate. It was a meeting from people from all around the world, which we have done in Guadalajara. And it was beautiful to have him here explaining to the PhD how Tasty Trades is changing the world not only of finance, but of research in finance, and how can that be applied how can that be applied in a company, and that was real. Actually, I know you don't believe it. I know you and Bonera and Dr. Jim has made that already a challenge for all the Mexicans PhDs. We listen to you your comments. We are already working. We are already working to show how can we make apply science to finance and how to create. We have this conference. It was amazing, that conference, in front of all PhD all around the world. Listen to Tom, and we explain how to apply science and how to engage people into financial markets. So to me, it's important to show you this because we are ambassadors of Tasty Trades. We believe in Tasty. Well, I certainly believe deeply in Tasty because the work you are doing with it's not only with trading but only in research and investigation, and that really helps everyone. So
Thank you.
yes. So
So may I add two things to what you just said? First off, Tom had a phenomenal. You guys rolled out the red carpet for him. He had a phenomenal time. I am truly not saying this because I'm on with you. I'm saying it because it's the truth. I'm 60 years old now, so I don't lie anymore. My days are numbered, so I'm telling you the truth when I speak. I never saw him come back from a trip so happy to and so fulfilled and rewarded by what he did than the trip that he had down with you guys in Mexico. He truly had a great time, and he also added that you guys asked some questions that were, mind blowing, and even over his head, he wasn't sure if he answered them correctly at times. You guys really challenged him, which was awesome. And the second thing, which I think is a little unfair to you guys, you've got Tio Tony, is that
yeah,
Uncle?
yeah, Uncle
Right.
Tony, Uncle
Yeah, you got
Tony.
Tio Tony in your corner. It's not fair. If there was a fight, they would stop it. You guys win.
Yeah, Uncle Tony helped us so much into making this possible, and it was great to have him. He's
Cool.
such a good person,
He
such an
really is.
excellent. He does. Well, I can tell you some details about Tony and Tom relationship in which you can get jealous, but I'm not gonna explain that in live in the call. But it
Please
was a
don't.
great time. It was a great time. After the conference, we had an activity with the students. It was not prepared, Tony. We it was just fast decision making. We tried to, and I told all my students, okay, Tom, because technically they were not able to get into the conference because it was an international stuff and blah blah blah. But we have a conversation with Tom. We tried to decide who was the creator of the jade lizard because Tony says he is the creator, and I know that Liz and Jenny has different opinions about it. But we have a conversation with Tom. We have the opportunity to ask him about the future of the financial markets. We have the opportunity to have this conversation, and I know he just made the first step to create the best traders in Latin America. I know that. I for sure I know that. We have a great meeting with him. We had a great conversation. We discussed a trade strategy that Tony explained to us, and we had this meeting with the students. They are all advanced students in finance. They are all my students from the university, and we have this conversation. It was such a great experience. I know that this might be some life-changing experience for some students of mine. So I am deeply thankful about what Tom did here with us. And yes, well, at the end we have this picture. It is a natural picture. Don't tell anyone, don't ask anyone what I am carrying in the right hand, because Tom is the only one who's gonna tell you. But
That's a deal.
it's a deal. Just don't ask anyone. But
I won't ask.
So yes, and from there, well, we start to change. We start to have a conversation in which we decide to create this channel, and Tom decide to invest in us in this trading group. He himself, without the company stuff, he said, okay, if you want to trade, guys, if you want to start trading, let's trade. You start doing. We start with with 10,000. With $10,000, and let me show you. Let me show you what we are doing over here. Which is, are you able to see the screen?
Yeah, sure.
Yeah,
sure.
So, well, we have the account. We now have 11,000. 11,000. We've been doing great. Actually, we only have had like 2 or 3 trades, negative trades. It's been difficult.
Quit, you're ahead. Close it. Take the money off the table. Look at the return on capital.
I know. I know. No. Well, actually,
I'm teasing.
I'm planning to use this money for us. Well, the best students, for us to go to the Bat Trader tour and to see you there, guys. So honestly, that's the plan. Because this money is for learning purposes. I see it's not my money, honestly. It's for learning purposes, because I witnessed that process, and I know that's a will from Tom, because he did it thankfully, and I know this is for that purpose, and we are working on it. And we have several questions for you, because we are beginners. Well, at certain point we are beginners. And we have been trading this account with this all this volatility following the markets. The activity we are doing, we have this with this channel in YouTube. Basically, is to record all the. We are not planning to be famous on YouTube. That's not my plan, honestly. But exclusively to see the process in which we are trading the account. I think to me it's important to make this accountable. So we have been recording the whole calls in a live experience for students that they can join if they want to see what we are doing. And honestly, we are trying to replicate your morning call, the call that you do with Tom. Trying to be a little bit funny, but well, my brother and I, we both are PhD in quantitative methods, so we exchange some data from the markets and our vision of what should we do, and we ask the students for them to give us trade ideas, and we have this trade idea stuff in which they can gave to us what we think is the best way in which we can make the trading go. So
I love it.
We've been doing this activity just through 1 month, and we have been having good results. Until now, it's going on. It's going great, and I feel proud of it, because this couldn't be possible with Tom's help, honestly. And I think the best way to do it is this way. So So we have several questions to you, Tony,
Sure,
because you
sure, go
are
ahead.
the playboy of the markets.
Sure.
I
I'm here for
sold,
you.
I sold you your conference as the trader that Ton has already hired to help him to manage his portfolio, and that you are one of the legends of the market. So that's the
Thank
way
you.
it is.
Thank you.
So.
Thank you.
So, okay, we have several questions for you, and it's basically we've been discussing about the best way in which you think it's better to manage an account, using iron condors or using short strangles.
Well, I mean, if you're going to put a gun to my head and ask me for one
Yes,
simple
I'm
answer,
doing so. Yes,
I understand. I would say short strangle.
short
But let
strangle.
me,
Yeah.
let me. You can't. Everything can't be put in a box. You know what I mean? You got to have a little something. So let's do. I like to say in practical applications, I've got to take into consideration your account. You got a
Exactly.
$10,000 account.
Exactly.
Money is at a premium for you, right? You
Exactly.
know, it's a lot easier to make money with $1 million account than it is with a $10,000 account.
Yeah.
Just because you can put on higher probability strategies because you have more available capital. It's a lot easier to make 1% in $1 million account than it is in a $10,000 account. Now, to answer your question, strangles are going to be the key, but I think in a smaller account, you have to lean a little bit more directional in some products than completely delta neutral. And you're also going to have to define your risk like an iron condor. So instead of doing a $3 or $5 wide iron condor, and instead of doing a naked strangle, naked call, naked put, I would want you to do a very wide synthetic strangle. So
Okay.
for argument's sake, you got a $100 stock.
Okay, let's
And-
talk about which one we are.
Use Amazon. I mean, use
Because we already have Amazon in a Jade Lizard. We already have Amazon in a Jade Lizard, and it's and the strategy on Amazon using the Jade Lizard is if we get assigned, then we're gonna start selling calls and doing the wheel stuff and collecting premium. And that's
So what strikes do you have on in the Jade Lizard?
the Jade Lizard and the position. We have the strikes
100?
103.
You're
40.
short the 103 puts and you're short the 33-34 call spread,
Yes,
right?
sir, exactly.
Oh, okay. So now, and it doesn't matter. Like you probably put this position on Amazon, been going straight down for what seems like 2 weeks. This is probably a losing position for you, correct?
Yeah, then we have 2 days to expiration, 2 days to expiration, and it was killing us because yesterday we have like $1,000 lost.
Okay, so wait a minute. This is a weekly option. What month are you in here?
We have the days to expiration is 14, and the November 25th.
November 25. So you're in the weekly options here, right?
Yes.
Yes. November 25. So you have 14 days to go, correct? Before expiration? Okay.
Exactly.
Okay.
So-
all right. So, go ahead.
In this strategy, what we were doing is to be directional, betting in Amazon in around 100, and if we get assigned, we don't care because we like Amazon. So the practical
But time out. Bad language.
Okay.
Let me explain. You never want to get assigned. I
Okay.
know you like Amazon. You like Amazon at 103. It's 100 now.
Yes.
It was 90. You don't like it if they're going to give it to you at 103.
No.
If it's 90.
Yes.
So when you put this on, Amazon was probably around 120 or something like that.
110, more or less.
Okay. Yeah. At 103, I would love it too because it's 110.
Yes.
But at 90, I don't want it anymore. So I think this is all about mechanics. You got to be a lot more aggressive with your mechanics. Meaning that call spread you have that's trading for 0.
Yes.
maybe a penny or two or three.
Yes.
Zero. It's
Yes.
all the put. So when this strategy that started out probably with 15, 20 deltas when you
Yes.
originally put it on, approximately,
Yeah, approximately.
when that delta gets to 30 or 40, you got to do something. Remember, it's a bullish strategy and you're wrong. So when your deltas get twice as much as your original delta, at the very least, you have to do something. What's the first thing you could do? That call spread that you sold. If you wanted to use more buying power, actually, you wouldn't be really using any more buying power. You can take that that call that you're short, you could take that was it the 134, 135?
The 133, 34.
130, 133, 133, 134. You could take that 133 call with one click, buy it back, and sell another call like the 125. You'd have a wide call spread on, a big wide call spread. But remember, the stock at this point is 105 or 107,
Yes.
right? Because you're picking up some delta. You may have to go all the way down to the 115, but you're not using any more buying power, and you're making a synthetic strangle, which is a little bit more of a neutral trade than the bullish Jade Lizard that you had on.
Yes.
That was completely directionally wrong. Now, I mean, I'm directionally wrong all the time. I'm not arguing that you were directionally wrong.
We are assuming anyone knows anything. Yeah, and that's
Exactly.
That's clear.
So what would I do? Let's just assume that you loved Amazon, like you said, and you didn't expect it, and I never expected it to get, under $100 or $90.
No.
But let's say we're here now. We got bailed out, right? This
Yeah.
spread is trading for $4.90. You probably paid how much?
For which one? The call?
Yeah, well, no. How much did you sell the whole spread for? $2.50 when you originally put the trade on.
It is highlighted over here.
You can go to your activity. Click on activity on the left.
Okay.
Yeah, right. And then put in the top where it says symbol filter. Put in Amazon
Yes, sir.
and click enter.
AMZN.
One more N. AMZN.
Yes.
Click enter. Okay, so did you sold it for, it looks like $250?
Yes, sir. The whole
Okay.
Lizard.
The whole package.
Yes.
Right. And it's trading for $5, let's just say, for argument's sake, $4.95. You're out $2.50.
Yes.
Okay. So you got bailed out by this move, right? Because the move was, Amazon was a lot lower, right? Amazon was
Yes.
was $85.
Yeah, we
almost
have
$10.
After inflation data, we get bailout. Yes.
So it became a very heavy part of your portfolio, right?
Yes, it did.
Okay. So
More than
let's
10%. And I was because
Of course, I would be the same way, because this, again, in a smaller account, this one trade can blow up your whole portfolio.
Yeah.
In a big account, it can't blow up your whole portfolio.
No, we don't care. But
In a small account, you should be looking to make, $100, $200 on a trade.
Mm-hmm.
You really shouldn't be looking to lose more than $200 or $400 per trade, right?
Yeah.
Like maybe your losses are twice as big as your big
no,
one.
the biggest loss we will have is $50.
Perfect, but not including this one.
Not this one. We've been trading like 25 times. The only wrong we have only had 4 losses, and this one.
Okay, so what would I do with this existing position if I wanted to stay in November,
Okay.
right? The month that you're in. If I was looking to do something with this, I would buy back that 133 call,
Okay.
and I would go all the way down and sell the 103 call.
Okay.
And
So
you're picking up $1.92 or so, or $1.90 in credit.
okay.
Go to just go to the trade page for a quick second.
Trade. Yes.
Yes.
There you
Go to, yes, exactly, and open up the 14 app. Okay. So right. So I would, don't make the trade, but I want to just show you one thing I would do. I'm going to show you some other things I would do also.
Okay.
So
Yes, perfect.
Oh, wait a minute. You're long the call spread. I'm so sorry. By the 133. So you didn't do a Jade Lizard here.
Well, I think we enter with a naked put. Let me see the activity over here, because I don't remember.
That's okay.
I think I did the naked put. No, it was a Jade Lizard. It says so.
Well, yeah, but you bought the 130. You bought the call spread. A Jade Lizard sells a call spread and sells a put.
Yes.
You bought a call spread here. See it? You bought the 134,
Okay,
130.
the 134.
You just did it backwards. It's okay. Oh, here, the Jade Lizard you have here, you sold the 133, 134, and you sold the 103 put. What?
We received $250.
I see that. Well, this is the position you have. I don't know how you got to it, but that's a long call spread, right?
Yeah.
Jay should have a short call spread. I don't know if you made another trade or had an existing position on.
Well, that's a.
Maybe you got something clicked.
That should be.
It's here on your screen on the right. You got short 133, long 134. That's a short call spread there.
Yeah, there is a short calls.
But did you have an existing position on before? Go to your activity page for a quick second.
For activity, there you go.
Yeah, let's just look what you had here. You definitely got 250 credit. Oh, here, look at this next trade that's a working order?
Yeah.
Just cancel that for a quick second. See what happens to your.
It's a cancel. It's a okay activity.
You can leave it. It doesn't matter.
There you go.
Okay, so you had the 100 put. You sold that. You bought it back. You made money there, and then you sold the 103 put, and you sold. Yeah, you did a Jade Lizard there for $2.50. But
Exactly.
but go back to your trade page there.
It looks like a.
I don't know why that's like that. I don't know the answer. Go to your position tab for a quick second.
Position.
And let me see what you have there. Yeah, there you got short 133, short 130. Yeah, you got it's right. I don't understand. You have multiple accounts in here?
No.
Just one account.
Just one account. Yes.
Can you do me a favor? Click on the 133, 134 call spread.
There you go.
Yeah, and then right click and go to close.
Close position. There you go.
I know what my fault. You have your strikes upside down in the way I look at them.
Yeah, he has that.
Yeah. It's okay. Many people like it like that. I completely. I'm not used to looking at it that way. Like I have my strikes go the other direction.
I don't care.
Okay. No, you got it right. All right.
To me, it's just bullish. It's better to have them up, and bearish is better to have them down. So to me, it's just
got it. All right.
So
clear this trade. Everything is good in the world. I thought we had a major mistake here. Clear this trade for a second. So this trade is zero. It's trading for a penny, right?
Yeah,
I mean,
it's zero. Yeah.
It's doing you no good.
Yeah.
So I would look to buy the 133 call. Click on buying the 133 call.
So 133. There you go.
Buy that sell. Okay, perfect. And then go all the way down to the I'm sorry, all the way up.
Yes.
The way you have it to the same 103 call and click on sell that.
Call here.
Yep, sell other side.
Yep.
Okay. So let's look at what we're doing here. Okay. If you see in the middle, you're picking up 36 deltas. Do you see that in the middle where it says negative 36 deltas?
Yes.
Okay. Right now, your position has positive 60 something deltas, right? Go to your position tab real quick. I'll show you.
Yes.
Okay. So what do you have delta up here? Oh, you got beta weighted delta.
I can change it. Beta, delta, net delta. Isn't it? Yes.
Yep.
So let's change it because I see, well, as I'm directional, I prefer to trade with the beta. But
That's okay. But you see how you have 62.96 your delta on this position
Just give me a second to see.
where it says ETF.
Yes, ETF, yes.
Yep. See how it says 62.84?
Yes.
So or 96. So you have 62 deltas. You got 62 shares of Amazon right now.
Yes.
When I'm being mechanical, what I look to do is I look to reduce my delta by 50%. Why? Because I don't know what direction it's going in. You don't know what direction it's going in, but delta is risk.
Yes.
Delta is shares. Shares is risk. So it's like I say to myself, okay, I'm wrong, but I still am bullish on Amazon. When I put this trade on, I had 20 or 30 deltas. Now I got 60 deltas.
Yeah.
If I liked 60 deltas, the strategy I put on the first time would have had 60 deltas.
That's in order to reduce the risk
That's correct.
and not having the long 100 shares risk.
That's correct.
But reducing.
You may still get 100 shares, but I got to keep reducing my risk because I don't know which way Amazon is going. And if Amazon gets back to 103, I'll worry about it then because I'll have more money in my account just from this Amazon position because I've got 30 long shares.
Okay.
So each time it goes up from $100 to 103, I'm going to pick up $150. 30 times $3 or $4, some theta decay. I'm going to be almost back to even. If Amazon gets back to 103, I'll close it for a scratch and put on a new trade.
I get my premium.
That's correct.
Great.
So go back to the trade page for a quick second.
Because honestly, this is the thing that
Everybody struggles with.
No, I don't. I love it.
Oh, good.
I just love the graphs. Actually, that is the reason I trade on you guys because the graphics.
You put on the trade for $2, right? $2.50. You're going to roll down. I'm going to use round numbers. You're going to roll down for another $2. That means you collected $4.50.
Yes.
Your short strike is 103.
Yes.
Right. So now your break even is closer to $98.50.
Okay.
I mean, or $99. I mean, depending on where you get filled, which is where the stock is, as opposed to having to go $1 or $2 higher. Now,
and not get assigned. Don't.
And here, so when we put on a trade, like we like to put on a trade with around 45 days, like 45 days to expiration.
Yes, I know.
And then close it when there's 21 days to expiration. You're at 14 days to expiration. I would have looked to roll or close this trade 7 days ago. Now, just for argument's sakes, 1, 2, 3, 4, 5, 6, 7 days ago, Amazon was right here or a little bit lower, maybe a little bit lower. So all things being equal, we would have been in the same position money-wise. I would be down money with this position. You're down money with this position.
Yes.
So waiting the extra 7 days because the market rallied didn't hurt you.
No.
But the 6 days prior, the 5 days prior to this, you took a lot more heat than I would have taken
because
Gamma. I'm moving it to the next month.
Yeah, because of Gamma.
So that's one thing you can do if you want to stay in the short-term weekly options that you're in.
Well, the thing is that I know Gamma risk, and I know why you use in terms of time decay the later experience of 45 days. But as we have to be directional, I'm trading 21 days and just
I don't mind that, but let's think of something else.
But this is a very good call in which you are.
Well, I'm always looking to I'm going to give you more options. There's no wrong answer, and doing nothing is okay too.
Yeah.
Because on the 103 put, you still have almost $2 worth of premium.
Yeah.
So you have a little bit of cushion there.
Yeah.
But the expected move is $6 over the next 14 days.
More or less, yes.
$6.09 exactly.
Yeah.
So you're covering about a third of your risk. Let me give you another example. clear this out. Go to the trade page.
I did understand it, and I think it's quite wise to have done that 3 days ago, just to reduce the delta risk.
You should have been doing it actually when I'll tell you when you should have done it. Only because it's pricing. When Amazon got gapped down on the 27th to the 31st there, it opened around $97 or $98, something like that.
Yeah. 93, and then it went down to 86 or something.
Right. Well, I got on the 28th. It opened at $98, $97.81. Exactly. It got as high as 103 down to 97. That's when I would have been rolling down the call.
Yeah,
I don't know if I would have gone to 103 at that time. Maybe I would have gone to 105.
Yeah.
Whatever I had to do to reduce my delta by 50%.
Actually, because this is not to us. Well, in this vision, we have this vision in which is not annoying because we like Amazon, and practical risk is better than. So if we get assigned, okay, let's get it assigned, and then let's do a cover call and keep.
Well, you actually have a covered call on right now. Naked short the 103 in the money put.
Yeah, it is.
Is exactly like having a covered call at the 103 strike.
Exactly.
All right, let me give you another thing. What I would do. I would leave the 33, 34 call spread alone, or I would buy it back for a penny. It makes no difference to me at this point.
Yeah, at this point it's just worthless. Yeah.
I would probably buy it back just to get rid of it. But that's just me. Yeah, another thing.
I wanted to do so. It's just that this is a
Well, you don't do it until you do something to the put, and I'll explain to you why.
Okay.
Right now it's 1 penny. It doesn't mean anything. But sometimes it'll be 20 cents, 30 cents, 50 cents. You'll sell something significantly higher and it doesn't get to zero yet. So I'm giving up the 1 penny every time I'm closing it, or I'm giving up the 20 or 30 cents every time I close it. But I've got to do something else to recoup that money. Because over time, that 20 cents, that 50 cents, that penny, it all adds up.
Yes.
So if I wasn't going to touch this position, I leave the silly call spread alone.
Yes.
But if I'm going to touch this position, another thing I might do is I would look to buy back that. Let's go to the trade page for a quick second.
Yes, sir.
Let's buy back the 103 put.
The 103, this one, right?
Yep. Let's look to buy back the 103 put, and let's go to D16. Is that good for you guys on a time frame?
Okay,
or too far?
Let's buy back. Buy it.
Yep. And go to December.
Okay, so that's in terms of rolling the position.
That's right. I'm just going to roll the position. Sell the DC 103 put again.
103. It is down or up?
Right there, you got it. Right in the middle, up on the page a little bit. It's $6.75.
103. 103.
Click on that. Okay.
Buy it.
Now, you're going to sell that.
Yeah.
So now look at what we're doing here. They're both exactly the same thing. Here, what I'm doing is I'm picking up $1.85 credit.
Yes.
The last strategy I showed you, I was picking up around $1.85 credit, $1.90, same thing.
Yes.
The last strategy is much more sensitive to movement, right? If we only have 14 days. So my call is going to get bigger, my call is going to get smaller if the stock moves away.
Yes, it's more delta sensitive.
This strategy is more of more time sensitive, meaning like I have time on my side. Yeah. It's going to move slower. So if you really love Amazon, I roll the put. It didn't cost you anything to do. You actually got paid $1.85 to do.
Yeah.
You still love Amazon.
We do.
If it goes down, you're still going to lose money. If it goes up, you're still going to make the exact amount of money.
Why not get more money?
Why not get more money today? Because in the next 2 or 3 weeks, it might sit.
Yeah.
And instead of if Amazon is at $100, you sold your spread for $250, you lose $50. Yes. If Amazon stays at $100 for the next 2 weeks, you probably make back that $50.
Yeah.
Because if you look at instead of having out of the money there, if you put on theta decay or how much theta decay the option loses every day, you'll see it probably loses 5-10 cents a day. That's the difference.
Yeah. Yeah.
So for for me, just me, what you do is your business. For me, I roll down the call if I'm very confident in my trading. If I'm not that confident in my trading, I roll the put. Let me go one step further. If you roll the put, you could also roll the put down. Let me explain. Go down to the 100 strike. Take that 103 and just drag it to the 100. Other direction.
Yeah, it is change.
That's okay.
Yeah.
Okay, stay right there. Now look what I did. I'm still getting a 23-cent credit. Let's call it no credit. I rolled down my risk from 103 to 100.
Yes.
My break even now is 100 plus the 250 that you originally collected.
Yeah.
So your break even is really 97 and a half. And it cost you nothing to do it but 2 weeks worth of time.
Yes.
From 35 days to 14 days.
Yeah.
So if you really love Amazon, I stay at 103 and I collect more credit and I stand like machismo. If you're a little more scared, you roll down to 100 and you say, you know what? Come beat me. My break even's 97 and the stock is 100.
Yeah. Excellent. That was,
in my opinion, all of the things that I told you is better than staying there doing nothing.
Just staying there and get assigned. And just, if we get assigned, then we are going to use the stock buying power and we are going to be reduced in terms
I can't tell you the last time I got assigned on anything.
You ever
in 40
get assigned?
years.
You ever get assigned?
Never.
So you don't.
Never have. I can't. I mean, I hate to say never because I never thought a lot of things were going to happen in my life, but it's very. I can't remember It's been a decade.
It's been a decade in which you hold to.
There's no reason to have. Well, I'm not here for the directional risk. If I was here for the directional risk, you should have put on on like a lizard, like not a J lizard, a zebra. A zebra, yeah. If you want the directional risk, put on a zebra.
A zebra and just
you were just bullish. You were just bullish.
Yeah, I'm just bullish and I'm more efficient rather than buying the stock. So if I want to use derivatives and I'm directional, just use the zebra.
So if you're going to be efficient here, be efficient with the strategy. You have to do in my opinion, you got to do one of those two things.
Because we have this, if we have this perception, we are not liking iron condors. Because
iron condors are a very, very tough trade. They're a great.
It is hard to manage. It is hard to defend. Money. It's hard to make money with them, honestly. And
That's why I say you have to have a wide iron condor. Let's get rid of this for a minute.
We have been trading chicken iron condors on earnings.
Sure.
And because we made all the study, we get a range, and then the losing position is reduced. And if we don't get when we can cover with the spread. And honestly, that worked very well. During the earnings sessions, the Mike's special through chicken iron condors were doing good. But to be mechanical, not using earnings, iron condors in the size of our accounts. So what we are doing, we love jade lizards. For example, AMD, it's a cheap. It is a cheap iron condor. And we are having.
Can we go to AMD for 1 second here? I just want to change things for you for a quick second. Go. What do you got? The 72, 73, 60?
It's already close.
I know. I got that. Go to the trade page for a quick second.
Yes, sir.
You were in D's with 28 days, correct?
Yeah, we like 28 days because that's a time frame that we can see.
I got you. I got to go open it up for a quick second.
The 21, right?
No, to the 28 days, the one that you like.
The 28, yes.
Yeah. Okay. Perfect. And we're gonna just simulate a trade. let's sell the 72, 73 call spread, which you had done right in the middle of the page.
Yeah. It's just that I get confused because he's changed it. So
Change it however you like it. I don't care.
Sell the 75.
Sell this. Hey, what would you, if you were going to put on a Jade Lizard and AMD, what strikes would you do right now?
What would I do? Let me just do this quickly. 28. I will check the I rank and I will choose between 21 and 23. So I will choose 28. So then I will go to J Lizard and I will do it from. Right now I would do the 65.
Yeah, it doesn't. I don't want you to be bullish in AMD. It's just an example of,
No,
of
the
what
example would be I will try to attack the implied volatility a little bit bullish, and then the bullish side of the spread, I will try to do it far away from the, because to me
Perfect.
the call spread, it's just to cover the position of my bullish strategy. I mean,
I got it.
to cover
I love it.
the commissions. Actually,
I love it. It's perfect. It's perfect. Click confirm and send one time, and just show me how much buying power it uses. Oh no, it's right up there. It's $1,282, right?
yes.
Close that up for a quick second. You know, don't send the trade. So do me a favor. Go down to like go down. Let me see the puts. Like 60 puts, 55 puts.
So
Go down a little bit. Okay, this is gonna not be the best example, but you can take this and use it for a higher price stock someday. So go down a little bit to the go down like to the right there. Stop right there. Perfect. All right. So this uses $1,300. Let's say you were in an IRA account, or let's say this was a much larger stock. This would be using $6,000 or $5,000
Yes.
in buying power, right?
Yes.
So if you could go out and buy, for argument's sakes, the 53 put or the 54 put or the 52 put inside your Jade Lizard, right? If you buy that, you bring your buying power, go to buy, right to $1,200, $1,000, exactly as if you were in a margin account.
yes.
So if this was an IRA account, or you have IRA accounts like tax?
No, we don't, because we can't have pensions in the United States.
Okay, well in the
We're in
in the
Mexico.
U.S., if you have U.S. citizen or U.S. Students there, and they
We
have
have
an
a wall.
IRA, what's that?
We have a wall.
Oh, okay. Well, that would cost about $5,000 in buying power. But there's always a way to reduce the amount of buying power that you need. So to get back to your statement, which you asked me before, let's go to Tesla for a quick second.
Okay, Tesla.
You said to me, what do I prefer? Iron condors or strangles or jade lizards. Anytime you have a naked option, I'm going to love the strategy more than defined risk. But, one investor's floor is another investor's ceiling, right? We all have only X amount of dollars in our account.
Yes.
So we've got to use it efficiently. Here's
Yes.
a $200 stock.
Yes.
$200 stocks in a $10,000 account.
No, we can't.
It can't be naked, right? It
No.
uses too much buying power.
Not too much.
But let's try to get the buying power down to like $1,500, which
Okay.
is around your area.
Yeah.
So
that's
we would
perfect.
do a $15 wide synthetic strangle. So let's go to the 16 delta on each side. Just sell the naked call and naked put.
Okay.
16 delta on each side.
In strangle?
A strangle. Just sell a strangle.
Okay, in 15 delta.
16 delta on each side.
16 delta, okay?
Approximately. Yeah, use a round number. 160.
There you go.
Perfect. Or make it 235 just to use round numbers.
235.
Yeah, just to make round numbers.
Yeah.
Close enough. Okay. This uses $6,300 in buying power. Yes, you get $7,000 $700 in credit, but it's way too big for your account, right?
Yeah, it is.
If you go and buy the 75 calls, the 175 calls,
Okay, let's buy the...
I'm sorry, 175 puts, and then you would buy the 250 calls.
175. Ooh, there you go.
Yep, buy those.
Uh-huh.
I'm doing it the wrong way. Stop. I apologize. Not 175 put. Go down to 145 put. I apologize.
Let me just put it in your way. There you go.
All right, get rid of the 175.
So
Right
175.
right click on the 175. Just get rid of it for a minute. There you go.
Uh-huh.
And buy the 145 put.
145 put.
You gotta go up. Yep.
Put it's up. Okay.
Make it the 140. Make it the 146 or 143. It doesn't matter to me.
143. Where is it? 143.
143.33.
There you go.
Right there. Yep. Buy. You gotta buy that one.
Uh-huh.
Yep. And then go to the call side.
Uh-huh.
And buy the 250 call.
250. There you go.
It's down. Yep. You gotta buy that.
That one. Uh-huh.
Perfect. Okay. Now we're using $1,300 worth of buying power, and we get $360 in credit. That's very similar, a little bit more, than what you were getting on your Jade Lizard that had a bullish bias. This is a neutral bias. So if I was looking to put on a trade in Tesla, because I liked its implied volatility, because I thought it was going to be range bound and I wanted to put on a strangle, this is the way I would put on a strangle in Tesla with a $10,000 account.
But in single terms, isn't it that a white iron condor?
It's a wide iron condor. Now, if I was bullish on Tesla, like you are in those other stocks, because you do your analysis, you like it, I moved that put spread closer to at the money. Because look at your delta here. It's 140, right? 142.
Yes.
If I move that call spread up closer from 15 to 30, and I go $15 wide.
To one, excuse me, which one?
I want to be short the 30 delta put.
It
It would be here. I'll give it to you. Hold on.
There you
go. If I'm where are we? We're in the 28 days, right? Where are we? 35 days. Sorry.
45. 35.
Okay. Yep. I would want to be short something like the. Let's make it the 170 put.
170 put. Okay.
170 put. I'm short, and then I would be long the. There's no 155, so we do the 153 again. 153.33.
53. 154. Where is it?
One more strike the other way.
There you go.
Yeah, perfect. Now instead of collecting, $3.60 or whatever it was, I'm collecting $4.60. But my delta is only long 3.
Okay.
So you can keep moving that spread as much as you like to keep yourself delta neutral or more delta if that's what you want because you're bullish or you're bearish. If you're bearish, you move down the call spread.
Yeah.
But all I'm trying to do is keep my buying power the same. And I'm trying, if you look at the pop, our original pop was closer to 65%, which is more like a standard deviation, which is where I like to be. But if you want to take the directional risk, a 57% pop is about as tight as I would get. I prefer 60% and above.
Okay. That's informative.
Okay. My pleasure.
That's informative. So basically, let me make a short resume, but because this idea is advanced, a little bit advanced. So if we can't do short strangles, let's just do white wings iron condors. And the more bullish we are, the more directional we are, the more at the money we want to be into that. And never get assigned.
Never get assigned. And now how am I going to adjust this trade? So when my delta gets to 10 or 15, positive or negative, I've got to move the opposite side up closer to get me to 7 deltas.
Okay, so
I'm always cutting my delta in half.
Okay, so let's say we are directional and we already have this trade in which we want.
And I think you have to be directional somewhat in a small account.
Yes, we have. Well, basically, what we do is, I do. Let me show you what we do because that's the work we do with my bro. And there is something. Well, we apart from apart from there is the presentation. No, let me just show you. We are using the name just because to fulfill the icons, so it can. There's no commercial intention in this. But basically, let me just turn off the dark mode. There you go. So it's not that we want to be, well, we would like to be part of Tasty Trade someday, but what we are doing with my brother is just this volatility analysis of every single stock. So the density and we check all the skewness, and we create an indicator in which you can see how the volatility in deep it's being analyzed. So
I love it.
I create that regression. We made that regression using, well, vector autoregressive analysis to check the statistical performance of the distribution of the median of the moving average differences.
I love it.
So in that way we can get in certain terms directional.
Sorry, I'm trading. I will. I can't take my volume down on my platform and
Don't worry.
And have you there. I apologize.
We are trading too. Don't worry. With 10,000, but we are trading. But what we can see our time frame, it's 28 days. That's our analysis gave us a time frame of the future, the mechanical future into the volatility of 28 days. I know this is not the future, but that's the analysis, and we try to check that using the implied volatility.
I love what you're doing. Look, you cannot be successful if you don't do your own thing.
Yeah.
Because if you did it exactly the way I do everything, and it doesn't work for you, you blame me. And no, because it makes you feel better. If you do it and you go, hey, they like 45 days, yeah, it looks good, but I think 28 is better, it's yours.
Yeah.
Like, you own it. And you did the research. And when it goes wrong, like Amazon, when it goes wrong, you don't blame me or the TV or Kramer or Tom, or you blame you. You know what I mean? You say, well, I got beat. I was wrong. It's going to happen. It's going to happen a lot.
It has happened.
But what am I going to do about it is the point.
Yeah.
Like, it's not the 28 days didn't beat you. The stock beat you.
Okay,
So let's try to mitigate that risk by being mechanical.
So exactly. So in terms of being mechanical, you recommend us to, okay, if you don't have enough money.
When the biggest thing I can tell you is when your delta, your original delta, doubles, you got to do something.
Okay.
Whether it's do something to reduce your delta by 50%, whether it's roll down the untested side, roll to the next month, change it to from a jade lizard to a strangle, which is more neutral, even though it has a directional bias. You got to do something. You can't sit. I know Liz and Jenny, this is my opinion. I know Liz and Jenny like to play the wheel, like the ladies on our team. They like to get assigned the stock and then sell it. Not my style.
Well, but
they got bigger gullones than me.
It works because they have 25. But when you have 10, then you will have an issue, and is that if this is Amazon. It was the best stock in this whole market itself.
Hey! I used to be the best baseball player on my team too, but that was 25 years ago.
Yeah,
things move.
Exactly. So
markets change.
So this is a very good advice, because I don't like to be assigned, and honestly,
plus it uses too much money.
It uses too much money.
You're going to go from 20% to 50%.
Yeah.
You can't afford to do that in a small account.
No, we can't. So that's a very good advice. So the first advice that you gave to us is to reduce risk, reducing our deltas.
That's correct. Risk is delta. Delta is risk.
So if we already have a spread worthless, use that spread in order to reduce our delta widening the difference between, and if I get more money for the same credit, just let's do it.
Exactly.
Okay, and then the second advice will be, don't wait too much to get assigned. Roll it
Right.
over, and then if you like it, well, just be if you get credit, then just roll it. Is it? Is
Absolutely.
That's the second advice you're giving to us.
Absolutely.
Okay, and then if you don't have, because you are poor people from Mexico, you don't have too much money, then just wide your wings of your iron condors and try to be directionals, adjusting it in the way. Okay, that
You want to keep your buying power approximately the same throughout all the positions, so not one position gets too much bigger than the rest of them. And then all of a sudden, I got to smoke hopium. Please, come back to me this stock. I don't want to do that.
And we should try to have each position no more than 7%.
Fair enough.
That's what I'm trying to do. That's what I'm trying, and to rotate into sectors and
Fair enough.
choosing the best. Okay, so those tools are very useful, very useful, very useful. So okay, so we are trying to do, because we are trying to do your mechanics, and we said, okay, we are from Mexico, and the Mexican ETF is liquid enough, and we can afford short strangles on the Mexican stuff. So let's try to do 45 days to expirations, and to 21, and to roll it and to change it. And so I would like to ask you, because this is not a purse, but let's say this is a Pursman SPY.
Yeah. Sure, I get it. Yeah, it's actually done better this year than SPY. So maybe it's the new SPY.
Well, but it's trading at 53, so we can afford short strangles. So we are doing so. We are trying to manage a short strangle in this way. So,
all right. So what do you have on in here?
We have over here the EWW, which is the Mexican, and we have a short strangle. Let me show you a short strangle on December 16th.
51.56, right?
51.50. Exactly. And we have received a credit of 1.62.
It's trading right there. You're 35 days, right? Yeah, it's 160.
35 days. We are. It's right there. We are just waiting for the 21 days in order to take the 50% of the profit. Okay, but I would like to have your advice, having in mind our size and having in mind our management. Is this a good strategy? I feel it's too much capital for not that much money.
Exactly. That's it.
So we can't be mechanical.
It's very hard.
It's very hard to get a lot of money doing.
It's too tight.
It's too tight. It's a little. It is a liquid ETF.
It's good, not great. The options are a little wide, 20, 30 cents wide.
Yeah, they are.
That's no bueno.
No bueno.
I mean, a $50 stock should be 10 cents max, between the bid and the ask. You got that 56 call is 30 cents, 55 cents. I mean, that's not good.
Yeah, that is not so wide. It should be, and as we...
Well, I mean, the bid ask.
The spread.
55 cents.
Yeah.
Too wide. Like that market should be 30-40 or 40-45.
Yeah, the spread bid ask is wide.
That's no good. Because I don't know what the true price is.
No.
So for that reason, I would find a different $50 stock with tighter markets.
Yeah, and more liquid and not
more liquid,
so much capital.
More tight. Listen, Leonardo, the only thing you can control is your entry.
Yeah.
You can't control your exit because nobody knows what the stock's going to do or what's going to happen. So on entry, if it's the only thing we can control, then we got to make sure we got good markets, tight liquid bid-ask markets.
Yes.
And we got good volatility. if we don't have one or two of them, I gotta go.
Okay, so you don't like this?
I mean, I like the strategy. I
Yeah.
like the idea. I like everything.
It
I
is a
think
good
it
idea.
can look-
It was a big discussion. Okay, if we have this size account, let's do the Mexican stuff. You know, the Mexican version of the Mexican index, which is cheap
Sure.
and it's liquid and
Leonardo, I'm Italian. I don't do anything of Italian stocks. Maybe there aren't any, but I don't do it. Doesn't matter to me. What I'm doing right now is I'm making money. I don't care if Mexico gives it to me, Japan gives it to me, the United States gives it to me, Russia gives it to me. I don't care.
Yeah.
I'm just here to make money. I'm here for opportunity.
Okay.
This doesn't, I think I could find a better opportunity because of the tight liquid markets between the bid ask of the options someplace
Yeah,
else.
it works. Okay.
Nothing against Mexico.
No, I am not from Mexico.
I
from
mean, I'm just
Colombia.
saying. Nothing
Actually,
against
I
either.
am from Colombia. And my brother is from.
I
Colombia.
watched the movie. You don't fuck with the Colombians.
We are not
That's-
that bad, honestly.
That's Scarface, Tony Montana.
We don't, because we were trying to do so also with the Brazilian ETF, which is also liquid, and so let's say we don't like too much iron condors. We don't have that much money, so let's do short triangle with the Mexican and Brazilian stuff, and let's try to be mechanical in this. But we are having the same problem. It's not liquid enough. It's not giving us that much money, and it's burning a lot of our buying power.
Yeah, I for all the same reasons, I would find the same. I would find the same things.
Okay.
Like I would rather hear like
You will
I'd
prefer
rather
with
treat-
with
I
us.
would rather treat Uber if it's a $30 stock. You know what I mean? Like because the markets are so much tighter. I'm only mentioning them because they're $30 stocks.
Yeah, it's a $30 stocks, and we can. And
It's still crappy. I mean, your sweet spot is going to be somewhere between $45
yeah,
and
100.
$90
yeah,
stocks.
maximum 100. So
Maximum 100.
That's why we love AMD. That's why
Exactly.
we love Hewlett Packard. Actually,
Absolutely. $30 stocks. You got to be directional.
that's why we are looking for Cisco.
Perfect.
You know, that's why we are looking for data, and there is where the money is coming from. I mean, the positions we are right now very liquid. At Nike, for example, we like Nike. We are looking for that type of trades, and Amazon it's just in the limit. And
It's touching your limits.
it's
Yes.
touching
yes.
the, but it's quite dangerous if it goes out of the limit. And we said, okay,
I got you.
100.
I got you.
But my question is, okay, so don't mess up with this, trying to be mechanical with these cheap ETFs, because they are not giving a lot of money for the size account. Is that correct, your comment?
Correct.
Excellent. Okay, and the other one, we love it, and I know you love it too, and we have done a lot of good money with it, is TLT.
Yeah, I mean TLT is it's had more volatility this last year than any year prior. I mean, so yeah, I think it has to be on everybody's radar, and it's got good technical.
I've seen Tom's and yours face every time.
Yep. It hasn't treated. I mean, until the last couple of days, it was a tough trade.
Because let me tell you the mechanics we do. Actually, the mechanics
Sure.
we do with my brother is we check. Let me just show you, for example. In the morning call, we check economic data. We read the news. We read the Wall Street Journal. We read CNBC. I read them for my students. I read we check what's going on. And my brother does a resume of the economic data that came out, and we make economic investigation through what's going on with, and there is where we get sometimes directional, because I know your perspective of the implied volatility stuff, but we have to be directional. I like to be directional because our mechanics is to see the markets early in the morning after your your call with Tom and see the opening and take what direction instead of inflation. And that's why we have been doing quite well, and we are working selling premium. But the thing is, okay, your advice on TLT.
Well, TLT, I'm unlike Tom's very bullish on it. I'm not quite as bullish on it as he is. I think it has good implied volatility. The IB rank of 27 has come down with the stock rallying a little bit. I think it was, I still think it's a good play. I really think, if you're looking at a Jay Lizard in here, I think it sets up nicely for that. I think it sets up nicely for a synthetic strangle.
We are bullish. We are bullish. We think it's gonna come back. I agree with them because of all the inflation data. Everything is gonna come through the bonds, and I think the big whales are short, so they will have to take profit.
Okay, so if I was here, just to give it, you want to be bullish in here,
yeah,
and still sell premium. You can do a $10 wide iron condor,
okay,
but so I'm using about $800, which is what you kind of use. So if you want to go into December or you want to go to 28 days?
Well, I already have a spread. 94, 95 put spread.
So you're short a put spread.
Yes, sir.
Fine, perfect. Then I have no problem with that.
That's the way. Well, and we've been doing this since it touched the minimum of the year, and it's quite giving us all the premium. Well, at least 50% of each of the premiums. So we've been doing this mechanically, just using the spread. My question then is it better to widening the spread or?
Well, I mean, I think a $1 wide is it's like kissing your sister. You know what I mean? You love her. There's feelings there, but there's really no feelings there. You know what I mean? Like you kiss your girlfriend. You love them both. More feeling when you kiss your girlfriend, right?
Yeah.
So I think you have to go a little wider. $3 would be my suggestion.
Okay. So okay.
Little more skin in the game. You can have the same short strike if you want to. Like that 95 is what you liked. I would do the 92.95.
Okay. Yeah. Yes. Yes, because we are bullish, so we want to be in the money, more in the money. So, but your suggestion is don't get the spread shouldn't be.
I think it's too tight.
Tight.
You don't get paid for the directional risk. It becomes more of a trade. I'm going to keep on for 20 days, and I'm going to make my $20 or $30, whatever it was.
Yes, it is that way. So you prefer to widen the spread?
Yeah.
To make it wider.
You're doing all the work to figure out you're bullish or bearish, whatever the case may be, and then you
just $20.
Yeah, you're sweeping up. I want to be in the front of the store.
Yes.
You know what I mean? Like you're like a I want to own the restaurant. I don't want to be sweeping up the restaurant. You know what I mean? Like I'm getting paid, but you're not getting paid enough.
Excellent. That's a very good comment.
Hmm?
That is better than your sister's comment.
Good. Yes. Good.
It was better comment. That one was better. Okay. Yeah. Well, let me tell you that. Okay. So.
No. Nobody ever said I was politically correct.
No. I like it. I know. I just love your show, and I think we are trying to do so in because there is a lot of economic data, and we both are PhD in financial data science applied.
It's a boring subject.
It is very boring, and I know anyone does really understands everything we said, but you have to.
And people hate math. They get very afraid of it. Maybe not your students, but I'm just saying, like normal people. you know,
Well,
they don't do good with math.
I have the best students. Actually, we have the best students, but I teach 150, and we have 4 that follow us.
It's awesome.
That's the way it is. So yeah,
Awesome.
but they are the best. Honestly, Fabricio, Akira, and all which are. If I don't know if they have some questions for you, so let me talk to them. If anyone would like to make a question and to ask Tony, this is the time, guys.
Okay.
I don't know if anyone would like to talk. Well, they are quite enough. We have 20, 16
Okay.
students because all this stuff. Okay, so what advice would you give us from this management and all the stuff that we are doing?
Well, first of all, you unfortunately, the only way you can judge somebody is by how much money they make. And you
Yeah.
guys are doing a phenomenal job. So if I was to tell you to do anything, I would say don't change a thing.
Okay.
Because you're doing phenomenal. Like, you don't need me. You don't need Tom. You don't need anybody. When you really need somebody is when it's not working.
Okay.
And when you're never going to have any friends is when it's not working. As long as it's working, you always have friends. They always want to know what you're doing. They always want to help you.
Yeah.
And when you go bad, nobody wants to help you. So I would continue doing what you're doing. I would just work on a little bit on your mechanics, on how much buying power you're using.
No, this advice is great.
Not being so stubborn. Like, Amazon, I think you traded that completely wrong. Like, not because the stock went down. That's going to happen, or the stock goes up because you're bearish. It's going to happen. I just don't think you could have been in a better place than what you're in.
Yeah, because of the size account, not because of the trade.
Well,
because
you
of the
always
size account.
think
I received it in that way, because the exposure was too much because of the money we were getting, and then we couldn't make all
But
those
now,
sort of
but now
trades.
you're going to do a wide put spread
Yeah.
instead of doing a naked put spread on a stock that's too expensive.
Yeah.
You really like Tesla? Fine.
Okay.
I'm going to do a wide put spread
I can,
and a tight call spread. $5 wide call spread. $10 wide put spread.
Yeah.
Or $15 wide put
Excellent.
spread.
Excellent.
So if you do a $5 wide call spread and a $15 wide put spread, and you collect $5, you're bullish.
Yes.
You got no risk to the upside.
Yes.
Same thing as a jade lizard.
Yeah, it is a
I think
a
it's the
cheap
type of
jade
trade you'd
lizard.
be very comfortable holding.
It should be a cheap jade lizard.
I did this in coin yesterday. So in coin yesterday, so I have a podcast also. It's called Option Trades Today, which is free and anybody can go to it. And I'm on the follow page, and those are all my trades. So in coin yesterday, I'll show you what I did. I did a jade lizard. It's exactly what you guys like. Let's go to the trade page.
Right? Yes, sir.
Yeah. Let's go to December with 35 days.
35 days. Yes.
Yeah.
Wow. The implied
I saw.
volatility- Holy.
It's got high implied. It was actually higher yesterday. It's got high implied volatility. It's got high IV rank. And the stock was beaten up. Now it's in an industry that everybody's talking about right now,
Okay,
and that's why it has a high implied volatility.
Let's do this one in your name.
That's right. That's right.
Let's trade it. Okay, so
Yeah, go ahead.
let me just do what I do. And okay, if you were one of my students and you will talk, okay, because we are not having that much ideas. Okay, so profe, that's the way they call me in Spanish, profe.
Okay.
Let's do a J lizard. I will do it a little bit deep in the money, and I would do that.
Okay. So I'll tell you. So I'll tell you exactly what I did do. I didn't want to take as much as close as risk to you was. Now remember, the stock was lower, and this is a bullish strategy, so I got lucky. But I sold the 55.60 call spread.
55.
The call spread. I did the 55.60. Move it down 4 more. $10 down 55.60. 55.
60.
60. And the put I sold was 40. Go down.
There you go.
Up. And I sold that for $5. Hold on a second. I'll tell you right now. I sold that yesterday for $5.30.
Okay, so now you have $100.
That's almost
Almost
a little less, $50.
$50 in one day.
It's 480. I did it for 530.
Okay.
But
Okay.
that's the spread I did yesterday with the stock at $50.
Okay.
So if the $2,500 or I think it's about $2,500 in buying power is too much money on a trade like that, I would go down to the 25 puts and buy one of those.
Exactly. So
You-
25.
and that reduces my buy right, and that reduces my buying power down to that $1,500 where you want to be, and there you got $1,100. That's the type of trade I make.
Yeah. I would. Well, if I want to make.
Now, stock's up $5 today. I don't want everybody to go out and do a trade that's bullish in coin because I think it's already moved. But if I was looking at
No, I get the idea. I'm not going to trade it because of the Bitcoin stuff, because of the motion of talking with you. I'm not going to do this trade, but I understood the. Okay, so perfect. That's just great. Great.
so instead of instead of taking in $5.30, you take in $4.90. Big deal. At
But
least I
my
get
buying
trade.
power reduced from 2,000 to 1,000 in my size account. It's
Now I can
manageable.
put two trades on.
Yeah.
If I find another trade that I collect another $300 or $400, now I'm getting $700 for $2,500 worth of buying power
Exactly.
instead of $500. I mean, you got to use your money effectively.
Wisely, yeah, effectively. Excellent. That was some good comment from you.
Great, man. I'm proud. Thank you. Appreciate it.
I really appreciate your help, and I am gonna try to make these calls with different parts of the team, with Mike and your son Tony,
Sure.
and every 3 or 5 weeks we're gonna try to manage the account in order to get the money to visit you guys and have again lunch with you and with
Awesome.
all stuff, because we do really appreciate and love. We do really love. We do really love. So one-
Akira has a question. I believe his name is Akira. I don't know.
yes,
Go ahead, sir.
go ahead,
If you don't believe Leonardo, if you don't mind.
Akira.
I'm Akira, just a pleasure. I have a question for you, and what is your strategy or your how do you make trade options with weekly expirations? Because we have met with stocks like P&G or Home Depot that we do really like the stock, but we don't really like the chaining options in weekly expirations. So I want to know your opinion.
Excellent, great, Akira.
Yeah,
Great.
I
Great
think
question, buddy.
so. Here, actually, I don't know if Tom mentioned this. Sometimes he doesn't. He invented weekly options. Do you know that?
Yeah, I did.
Yeah.
I told them,
Yeah.
but it's good for you to tell
and-
them.
Right, and we don't trade them. And so I don't know if that answers your question, but I think it should answer your question. I find it very hard for retail investors, especially new ones, to trade very short-term weekly options in any stock, Home Depot or anything else.
And
I just think the pain is so much greater than the reward when it goes wrong,
yeah.
especially in a small account.
Mechanically, it's just a way to lose all the money.
Time is your friend in a small account.
Excellent.
Bigger account, time don't mean nothing.
Okay. And what do you think about 0 days to expiration strategies? Honestly, I got in your head. Would you?
If you want to be directional, I like them, but I don't do them.
But to us,
If you want to be directional, I like them. You want to sell a spread or something like that.
no, I pass.
You want to buy a spread. You want to buy a spread. You want to buy an at the money spread. You want the action. You want to buy a strike or two in the money, sell a strike or two out of the money. It's basically stock substitution. Go right ahead.
I
50,
am not
50
that.
shot.
I am not that good teaching them those type of strategies. I want them
I'm
to
the
preserve
worst.
capital.
If you don't think you're good, I'm the worst.
Yes, because I want them to preserve capital. I don't want them to teach them to be directional traders. So
Listen, my mom was a waitress, My mom picked up quarters and nickels from the table to serve people. My dad was a hoodlum. You know, money wasn't always available to me. So for me, it's my greatest asset because it was my gift to get out. And I'm not giving it away on a 50-50 shot.
Yeah.
I have to have the odds in my favor.
Yes.
It's too much. It was too hard to get.
Great. That is a good teach. Great.
That's the truth.
Well, that's the thing that we have to learn from. We have a dream. I want, because I have a meeting with Tom some days ahead. We dream to be here.
I hear you. I want you to be there. Love to have it. It'd be a feather in our cap. There's nobody pulling for you more than myself and Tom.
Yeah, so we have this dream.
Yeah, and if you can get rid of that guy on the top right, Tony Mexico, if we could put you guys there and get rid of him, it'd be even better.
No, or we can include him.
No, you don't want him.
He's a great guy. You can,
He's an awesome man.
no,
You meet very few men in your life that are
yeah,
or people,
I
anybody.
have that good experience, and
He's
does.
a way better person than myself. He's a way better person than Tom. He is.
I don't know, but
best.
he's one of the best. Yes,
Yep.
he's one of the best. So we have this dream, this project itself is to be there, because the money itself is for this purpose. So we would like to be there, and it would be good to have all the team helping us and let us taking our decisions, and that in that way we can give something back to Tracy, which has believed in us.
Awesome.
So
Awesome. I love it.
that's something we would like step by step doing, and I think it was a great call. I don't know if you have some final comments.
No, I mean, thank you so much, and I'm sorry I messed up last time. I'll never make it happen. I promise I won't let it happen again. I'd love to come back on if you want me another time.
I would like to be this mechanical,
Okay.
Let's keep doing calls for the Tasty Trade team, and let's help us to manage the account. We already have talked with the people in the university in order to see the way in which you can help us and everything.
Okay.
But that's the project. The project itself, from the Tom's money, is to make this mechanical and to make this useful for the students, because that's the way it is. I mean, I'm not a rich person, but I have a lot of knowledge, and that's Richmond itself. So that's the way it is.
Thank you, brother. Appreciate it. Appreciate everybody listening too.
Okay, thank you so much, Tony. It was a great experience to have you. Thanks, and I don't know if anyone does have any other question. Carlos, Edson, they are quiet today.
Hey, Leonardo, do you have my email address?
I do.
Okay, send me an email. I'd like to give you my cell phone number. You have a question or you want to do something one day, like really quickly. You got to,
Right.
if I'm available, I'd love to make myself available to you.
Excellent, Tony.
All right, brother. Be well, everybody out there.
Bye bye.
Ciao.
No le pude comentar lo del mezcal, pero bueno, excelente. Sé que estuvo